This is Eric Mwatha with Mwatha.com. Continuing here, let's take a look at the back test on the RSI and how it can help you time exits out of a stock. And we're going to go quickly here. We are looking at a long-term monthly chart for OSK. Take a look at how the stock made a high sometime here in 06 and would come to make another nominal high sometime late 07. What is interesting is how the RSI would have told you that there was a high being formed there in 07 when the stock came back. See, it had been forming this nice upward trending RSI level line that had taken the stock from around the level below, let's say about $3 all the way to about 61, 62 over about 9 years. So big move in a long period of time. Moral of the story here is, since we are looking at the back test, is take a look at how this trend line, once broken there in 06, the stock would come back and the RSI tried to move above that line, failed, and turned around. And that failure, or that failed back test there, would have told you, without too much information, without knowing the sales of the stock or the PE or what the market was doing, without going into the financials or the fundamentals or the sector performance, this knowledge, the fact that the stock had failed, this backtest here, would have told you to get out of the stock there. Now we take a look at the same chart, or SK monthly. What we want to look at here quickly is, again, there was another sell signal because the stock made incremental high here to here, and yet the technicals failed to follow through because they moved lower. The technicals did not make a new high. That's a sell signal on the monthly chart. So that again was a sell signal there. And there was also confirmation on the monthly MACD. As you can see, the MACDs made a lower low over a period of 1 to 1.5 years. So the MACDs also confirmed that there was less technical strength to push the stock higher. So you had the failed backtest there telling you there was a sell signal. There was also the idea that the two levels on the RSI did not make a new high. So that was another sell signal. So the stock was a sell at that point. Also on the same chart, but now we are looking at the stock here in this period here, sometime in beginning of 2010. And the reason why I bring this up again is because you see now there was a fresh line established here. If you take this darker line here that had been formed by that double bottom there, in other words, had you taken that low and that low, drawn a straight line, you end up with this area here. There was a double top that was recorded on the RSI there. And that double top was a failed back test again, in the sense that once this line was broken here, we went down, hit that line, could not move above that, and rolled over. That was another sell signal. That's why you see the stock made a high here in the lower 40s and would eventually move back to as low as $15. That's a huge loss in about a year and a half. So what I was trying to talk about here is the fact that the RSI backtest can give you a lot of information and sometimes help you to get in a stock or out of a stock. This is Eric Mwatha with Mwatha.com. As always, good luck, peace and blessings. We shall continue on with our learning lessons here. I'll be back.